have discussed about the meaning of bonus shares and then objectives of bonus shares, SEBI guidelines by issuing the bonus shares and then sweat equity shares meanings in last class discuss. In this class we have to discuss about the accounting entries regarding the issue of bonus shares. Why we have to pay the bonus shares and what are the journal entries comes under the issue of bonus shares. ನೋಡಿ ಅದು ಯಾವ journal entries ಬರ್ತಾವೆ. Bonus shares is it may be paid in cash or it may be issued in cash or in shares. ಹೌದಾ, bonus can be issued at par at premium. Bonus can be issued at par as a premium, and then bonus shares can be given by making a partly paid up shares as a fully paid up shares. Bonus shares can be by making a partly paid up shares as a fully paid up by making the partly paid up shares as a fully paid up, and then next one by issuing a fully paid up shares. ಇವೆರಡು ನಾವು ಏನು ಮಾಡ್ತೀವಿ ಜನರಲ್ ಎಂಟ್ರೀಸನ್ನ ಪಾಸ್ ಮಾಡ್ತೀವಿ. ಆ್ಯಂಡ್ ಫಸ್ಟ್ when the fully paid bonus shares are to be issued ಇದ್ದಾಗ ನಾವು ಯಾವ ರೀತಿಯಾಗಿ ಜನರಲ್ ಎಂಟ್ರೀಸನ್ನ ಪಾಸ್ ಮಾಡ್ತೀವಿ. ಹೌದಾ, ಜನರಲ್ ಎಂಟ್ರೀಸ್ ಇನ್ ಕೇಸ್ ಆಫ್ fully paid bonus shares are issued. When the fully paid bonus shares are to be issued ಇದ್ದಾಗ ಜನರಲ್ ಎಂಟ್ರೀಸ್ ಅನ್ನು ನಾವು ಯಾವ ರೀತಿ ಪಾಸ್ ಮಾಡ್ತೀವಿ ಅಂತಂದ್ರೆ first for transfer of amount for the issue of bonus shares. For the transfer of a amount by issue of a bonus shares ಇದ್ದಾಗ amount ಅನ್ನು ಟ್ರಾನ್ಸ್ಫರ್ ಮಾಡಿದ್ರೆ for transfer of amount by issue of for the issue of bonus shares is equal to profit and loss account debit general reserve account debit and then capital redemption reserves account debit capital redemption reserves account debit security premium account debit securities and then capital reserve account debit and then any other reserves ಬಗ್ಗೆ ನಮಗೆ ಏನಾದರೂ ಇನ್ಫಾರ್ಮೇಷನ್ ಕೊಟ್ಟಿದ್ರು ಅಂತಂದ್ರೆ ಆ ಅಮೌಂಟ್ ನಾವು ಏನು ಮಾಡ್ತೀವಿ ಡೆಬಿಟ್ any other reserve account debit to bonus to shareholders account, being declaration of issue of bonus shares. Narration being declaration of issue of bonus shares. And then next second entry from bonus to bonus to shareholders amount na ನಾವು ಏನು ಮಾಡಿದ್ವಿ ಕ್ರೆಡಿಟ್ ಮಾಡ್ಕೊಂಡಿದ್ದ bonus to shareholders account debited to next journal entry bonus to shareholders account debited to share capital account and then to securities premium account if the bonus shares are issued at premium, if the bonus shares are issued at premium ಇದ್ದಷ್ಟೇ ನಾವು ಏನು ಮಾಡ್ತೀವಿ securities premium ಮಾಡ್ತೀವಿ. if not ಬರೆಯುವ ಅವಶ್ಯಕತೆ ಇಲ್ಲ. it is not necessary to write the securities premium account. bonus shares are issued at or premium. Understood? And narration being for the issue of bonus shares. ನೋಡಿ first for transfer of amount for issue of bonus shares, profit and loss account debit, general reserve account debit, capital reduction reserve account debit, securities premium account debit, capital reserve account debit, any other reserve account debited to bonus to shareholders account, being declaration of issue of bonus shares. And then here bonus to shareholders account debited to share capital account to securities premium account. if the bonus shares are issued at premium, ಇದಾಗಷ್ಟ ನಾವು ಏನು ಮಾಡ್ತೀವಿ securities premium ಮಾಡ್ತೀವಿ. if not ನಾವು ಮೆನ್ಷನ್ ಮಾಡೋ ಅವಶ್ಯಕತೆ ಇಲ್ಲ. being for the issue of bonus shares. ಈ ಜನರಲ್ ಎಂಟ್ರೀಸ್ ಎಲ್ಲ ಯಾವಾಗ ಬರ್ತಾರೆ ಹೇಳಿ, when the fully paid bonus shares are to be issued ಇದ್ದಾಗ ನಾವು ಈ ರೀತಿ ಜನರಲ್ ಎಂಟ್ರೀಸ್ ಅನ್ನ ಹಾಕ್ತೀವಿ. I hope you will understood the concept of fully paid bonus shares are to be issued. And then now next journal entries, when the bonus is given to convert the partly paid up shares as a fully paid up shares. Now the second point, when bonus is given and bonus is given to convert partly paid up shares into partly paid up shares into fully paid. Now what are the journal entries considered? The conversion of partly paid up shares into fully paid up shares. Now the first one, profit and loss account debited, profit or general reserves account debited. General reserve account debited, and then capital reserve account debited to bonus to shareholders account. 2. Bonus to shareholders account. Now the narration being the declaration of bonus, issue of bonus shares. Now the next journal entry, share call account debited, share final call account debited, to share capital account by making the final call money due, by being for making the final call money due. And then next entry, bonus to shareholders account debited, to share final call account, to share final call account. Narration being you for utilization of bonus to make the shares as a paid up. Make the shares as a paid up. How the ನೋಡಿ first when the bonus shares is given, conversion of partly paid shares into fully paid shares ಇದ್ದಾಗ first entry profit and loss account debited, general reserve account debited, capital reserves account debited to bonus to shareholders account being the declaration of bonus, and then share final call account debited to share capital account being for making the final call money due, and then bonus to shareholders account debited to share final call account being for the utilization of bonus shares make the shares as a fully paid up. ಹೌದಾ ನೋಡಿ ಈ ರೀತಿ ಜರ್ನಲ್ ಎಂಟ್ರೀಸ್ ಬಂತು. ನೆಕ್ಸ್ಟ್ ಎಂಟ್ರಿ ಜರ್ನಲ್ ಎಂಟ್ರೀಸ್ ಫಾರ್ ಅಕಸ್ಮಾತ್ ಕ್ಯಾಶ್ ಬೋನಸ್ ಕೊಟ್ಟಿದ್ರು, ಜರ್ನಲ್ ಎಂಟ್ರೀಸ್ ಫಾರ್ journal entries for a cash bonus. Now the particulars, LF debit and credit. Now the entry profit and loss debited to bonus payable account. Profit and loss appropriation account debited to bonus payable account, and then next bonus payable account debited to bonus payable account debited to bank account for the journal entries regarding the issue of cash bonus. I hope you will understood the journal entries regarding the issue of bonus shares. And now we will move on the right shares. What do you mean by right shares? Already you know the meaning of bonus shares and journal entries. Now, what do you mean by right shares? Right shares under ಏನು? Right shares. Whenever any existing public limited company proposes to make a further issue of shares, it has to make the issue in conformity with the provisions contained under section 81. Under section 81 of the Income Tax Act of the Companies Act of the Companies Act 1956. In simple words, where the company which has already issued to the shares desire to make a further issue of the shares to increase its subscribed capital. It is obligatory on the part of the company to issue such shares to the existing holders of the equity shares in proportion or ratios to the paid up capital as on that date, or as nearly as the circumstances permit. However, the company new shares may be issued by the company to the general public, provided the necessary resolution has been passed in the regards or the necessary approval has been obtained from the central government. As the case may be to that effect, if such pose as a beneficial to the company, to the government, as the case may be to the or they are rejected it or they can sell the rights in full or part to the other person. In case these shareholders do not subscribe the or do not transfer the right, then the company may offer the rights to issue the public, and the offer of a fresh shares made by the company to the existing holders of the equity shares in a specified manner is known as right shares. The offer of a fresh issue of shares made by the company to the existing shareholders of the equity shares in a specified manner is known as right shares. The legal right of a issue of the shares is an advantageous to the existing shareholders, specifically when the market prices of the shares is higher than the issued price. The monetary benefit arising the existing shareholders from the right issue is known as value of right. Value of right is nothing but the monetary benefit arising the existing shareholders for the right of issue is known as value of right. The calculation of such value of right is explained now. calculate the first we have to calculate the total amount of market value and then market value of the number of shares which is required be held by the existing shareholders, exercise this rights and the benefit thereof of the fresh issue of concession price. I hope you will understood the concept of right shares. Now, what are the benefits? What are the benefits of right shares? Since the right shares are issued by the existing equity shareholders proportionately on the basis of the paid-up capital of the shares held by them, and the control of the company is retained in the hands of those shareholders only. Since the right shares are issued to the existing shareholders according to their existing holdings of the shares as on the particular date, misuse of the issue is not possible by the management by the company. Since the dissolution or dilution in the value of the holding of the existing shareholders is duly compensated by issue of right shares at a lower rate than the market price, they do not suffer any losses. Since the right shares are issued only to the existing shareholders, they will be satisfied. Since the right shares are issued to the existing shareholders, since the expenses that would be have been incurred by issuing the shares to the public are saved by the right issue. If the right shares are issue of shares is made by the company from a time to time, the image of the company will be brightened. What are the benefits regarding the right shares? I hope you will understood the concept of bonus shares and then right shares. Next class we will discuss about the problems based on bonus shares and then right shares. Thank you. Have a nice day.